Let's play a quick game. Who do you think pays more taxes? Anyone working 9 to 5 and earning around $70,000 a year? Or Jeff Bezos, who's worth over $180 billion? Well, in 2007, Bezos paid $0 in income taxes. Zero. Zilch. Nada.
Amazon CEO Jeff Bezos avoided paying income tax.
Bezos, Michael Bloomberg, Elon Musk, they paid relatively little and sometimes nothing.
And before you rage quit life, here's the wild part. It was 100% legal. Because the US tax system primarily taxes income, not wealth. Most of the wealth of billionaires like Bezos comes from asset appreciation, like stocks, which is not taxed annually. Amazon, the company he founded, does not pay a dividend to shareholders, meaning their gains come from the increase in stock value, which is not taxed until the stock is sold. And you know what? You can use the same strategies the wealthy use to pay less taxes while generating more wealth. Because they're not cheating the system, they're just playing the game better than anyone else. The very first thing you need to understand is that the tax system isn't broken. It's working exactly how it was designed to reward behavior that benefits the economy. Because most people make earned income a salary or wage. That's taxed at the highest rates. But the wealthy? They live on capital gains, real estate equity, business write-offs, and debt. Let's take Warren Buffett as an example. He once admitted he pays a lower tax rate than his secretary. How? Because Buffett earns most of his money through investments taxed at a lower capital gains rate, usually 15 to 20%. So the first rule is, don't just earn money, build assets. Because billionaires build their assets and they don't sell it. Instead, they borrow against it, and that is their actual cheat code of saving tax, which feels illegal, but is 100% legal and used by almost every billionaire out there. It's called borrowing against your assets. Now, to understand this trick, let's take an example with assuming you've got $1 million in stocks. If you sell those stocks to get cash, you will trigger capital gains tax, and you could owe around $200,000 or more instantly in tax. But do you know what the rich do instead? They don't sell, they borrow against it. Just like taking out a loan on your car or house. They borrow money using their stocks, real estate, or even their company shares as collateral. And guess what? Loans are not considered income, so they aren't taxed. They do not sell their stock to buy homes, jets, luxury cars. They took loans backed by their shares that let him access millions in cash without paying a single penny in taxes, and they can still buy whatever they want. This is the world of smart people. But definitely when you owe something, you have to pay it back as well. And in this scenario, your loans against assets like stocks or real estate are often interest only or line of credit style, which means you can choose to pay back gradually over time or never repay directly, and instead sell a portion of your appreciated asset years later. Often at a lower tax rate, long-term capital gains. It's all about control and timing, and this is not it. The best part of this whole process is when you borrow against your portfolio or real estate, using an appreciating asset as collateral and make money while owing money. Confused? Let me explain. For example, if you have an investment portfolio and you borrow money against it, now an average investment grows at 8 to 10% annually, like it has historically for the past 5 decades, and your loan interest is, say, 5 to 6%. Can you guess what's happening? Your asset is outpacing your debt. You're literally making money while owing money. And imagine taking that borrowed capital and buying a new company. You build it, scale it, and make it profitable. That's wealth building on steroids, using someone else's money to create a whole new income stream without selling a single asset or paying a single cent in capital gains tax upfront. That's not luck, that's a strategy. Pure, calculated, and 100% legal. When done right, this isn't just a smart move. It's a lifetime wealth machine running in the background, and you're the one who built it, with borrowed money and bold thinking. And the bottom line is, rich don't avoid debt. They use it strategically. They borrow to invest, not to consume. Poor people buy liabilities. Rich people buy assets. Wealthy people use other people's money to buy appreciating assets and build tax-free or a wealth with minimal tax. The key is to borrow smart. Invest the borrowed money into income-producing or appreciating assets and let time and compound growth do the heavy lifting. This is how you can legally live off your wealth without ever needing to sell it.